Good morning, students. Welcome to our morning sessions of this very important topic, exemptions. Now, up to the previous class, we completed exemption up to this point, that is transportation, correct? Yes. Now we have to proceed from here further. But before that, if any of you have a query, please feel free to ask. Yes, students, if anybody has a query, please feel free to ask. Yes, very good morning, Radha. Good morning, Gurram. Good morning, Narinder. Everyone, very good morning.
Sir, I wanted to know about the new entry on the real estate, na 41A and 41B about JDA. I was not clear about that.
See, what is that entry? I'll tell you again. So first understand what is JDA. Full form, I'm sure you all would be knowing, it is Joint Development Agreement. Now, what happens in a Joint Development Agreement, we'll have to first understand that. So I am the landowner. First possibility which happens is I sell off my land to you. The land becomes your property and you as a builder do construction. Now, this is not JDA because in this case, my entire rights, my entire ownership control over the land is over. Second is, now you'll find in many cities, the lands have become very costly, especially if the lands are in premier location. So it is not economically feasible for the builder to outrightly buy the land and then do construction and take such a huge risk. Also at the same time, now the landowner has also come to know that instead of selling the barren land, instead of selling the land per se, if he is also able to participate in the construction of this project, and then if he is able to sell the constructed flats or shops or offices, he would be benefited more. Now, for both these reasons, an understanding is reached between the builder and the landowner, whereby the landowner, instead of selling the land, gives the builder or transfers the builder only one of the rights embedded in the land. See, land is a parcel of rights. You have multiple rights embedded in land. One of the rights is the development rights. What is development rights? Now, whenever you have a plot of land, as per the municipal rules, you are allowed to do some number of construction, which may be one time of the area of land, 1.5 times, two times. So that is what is also called as FSI, which is the construction potential in the land. Same thing is what is called as development rights. So development rights, as the name suggests, is the development potential of that land, that how much construction can be done on that land. Now, what I do is I tell you that I will remain the landowner, but I do not have the capability, the expertise, the skill set to do construction because it also requires a very specialized skill set. So I give you only the development rights in the land. So I continue to remain the landowner for the remaining part, and only the development rights in the land I transfer to you through this document, through this agreement called as JDA. So that now, since I've given you the development rights, now you become as good as the owner of the development right. Now, this is just for the understanding purpose. So you become the owner of the development rights in my land. So land remain mine, but I have sold or I have transferred one of the rights to you. Against this, you will be giving me some constructed portion. So we arrive at a ratio 50-50, 60-40, 70-30, whatever. So in this particular case, since I have given you the land development rights, you have to pay me. What you do is you pay me in the form of giving me, let us say there are going to be 100 units in this building. You say that, okay, I'll give you 40 units. So that is my consideration. And now what I wanted, that also has happened. Now I am now going to be owner of 40 constructed units, which I am also going to sell, like how the builder is going to sell his 60 units. Now in all this process, this transfer of this development right has been a big matter of dispute right from service tax era. When GST came, it was an implied presumption, which is even continuing today, that development rights are not land per se and hence they are taxable under GST. Because I'm sure you know that Schedule 3 says if you're transferring land, that is not taxable. But development rights are different from land. This is what is the understanding. Let me just inform you today, this is a very big litigation matter going on. Maybe next 2 to 3 years, we are expected to get a conclusion on this. As on date, the understanding is that development rights are different from land, and hence this transaction is not fitting in Schedule 3. Hence, whatever development rights I'm transferring to you are leviable to GST. This is the understanding. Now, in relation to this, there was an amendment on or applicable from 1st of April 2019, which is also called as the new scheme of real estate. Now, under this new scheme of real estate, what the government observed in the initial years of GST, that landowner many times is a farmer, is a retired person, and the person is not in a position to comply with the GST law, follow all the complications. So to simplify the you can say the procedural part, what they have done, they have firstly said in the hands of landowner, the transfer of development rights in the JDA is exempt. So now whenever the landowner is transferring, you are giving away the development rights in that property, landowner does not have to pay tax. So that is what is the exemption we read. Now the landowner is giving development rights, that is exempt. If landowner is giving the leasehold rights, that is also exempt. That were the two entries, beta. Is this fine?
Yes, sir.
Perfect. Yes. Others, what are your queries? Yes, students. Others, any queries? Okay, Guram says no query. Okay.
Sir, you were like, just one thing. Landowner is being exempted, so the tax is being paid by the developer. So that is under the dispute under the GST law. Is it so?
Firstly, understand one thing. Who is paying tax is a different thing. The point is whether this transaction is a taxable supply. So that itself is under dispute. See, today the law says landowner will not pay, the builder will pay in certain specified circumstances because we have made it exempt in the hands of landowner. That is a different thing. The question is, can there be tax on transfer of development rights? Because why I'm telling you to see what is a dispute, there are multiple parallel judgment. In fact, there was a very big judgment of 9-member bench, which is called as the Constitution Bench of the Supreme Court in 2024 in some other matter. Over there also the Honorable Supreme Court said that transferring any rights in land is akin. Akin means similar to transferring the land itself. Similarly, there is a very famous judgment in GST of GIDC. That is where the industrial leasehold rights are transferred. Over there also, the Honorable High Courts of Gujarat, then Mumbai, then others have concluded that transferring leasehold rights is also equal to transferring land. And when this particular matter had come to Supreme Court, the Supreme Court dismissed the application of the department, saying that no, we are not going to entertain this appeal. In other words, Supreme Court also concurred to what the High Court said. So today the jurisprudence which is developing even in GST law and which is carried right from the earlier laws is that land and any right in land are inseparable. Both are one and the same. So the question that in future Honorable Supreme Court will be answering is that can transfer of development rights be a taxable supply under GST? Who pays the tax? That will come later. Fine?
Okay, right now it is just under dispute. We should just understand that right now, by from the
Yeah, yeah,
landowner
yeah.
side, it is exempt. That's
It
it.
is exempt, and
Okay.
in specified circumstances, it is covered under RCM. If you even check the RCM list, you'll find the same point over there. So, what the law has done, they have exempted it in the hands of landowner, and under specified circumstances, made it taxable in the hands of the developer, that is the builder.
Okay, sir. Thank you for such a great explanation. Thank you.
Thank you, madam. So, you all should be also aware of all these things. So, in every topic, wherever applicable, I'm also giving you or informing you what is the dispute, because see, you all are at CA final. Very soon, you all qualify as a chartered accountant. At that time, it should not happen that you had studied something, you have understood something, and suddenly you will come across a contrary judgment. So that is why it is important that you understand this. Okay, so let us proceed. We start from here. So there is one more clarification relating to the goods transport service entry. Now, this clarification we have studied earlier also in the earlier chapter. See, there is a difference between giving the vehicle on rent, and there is a difference between doing transportation of goods. So these are different services. Similarly, what we read in the previous chapter relating to this, that doing a passenger transportation is a different service, and only giving your vehicle to them so that they can go on tour and travel is a different thing. So we have to understand the difference between the two services. One is merely giving the truck on rent. It may be given with or without the driver, and doing the transportation of goods. Now, why this distinction is important? One, the rates of taxes are different. Two, there are differences in RCM provisions. And three, for GTA, in the previous class, we studied that for certain specified transport, like transport of these goods, the GTA is exempt. Then where GTA does transportation for other than specified recipients, in other words, GTA does transport for any unregistered person, again it will be exempt. Now this distinction is important because this distinction will not apply if you are merely giving the truck on rent. If you are merely giving the truck on rent, then it will not be eligible for the exemption that we discussed relating to GTA, because GTA is the passenger or goods transportation service is different from renting of the vehicle service. So in the RCM notification, if you remember, we were studying over there again RCM of GTA, RCM of passenger transport, and over there we had discussed this same point with the same circular reference that we should not mix between the passenger or the goods transportation, which is a different service, and the other service that is merely giving the vehicle on rent. Now, proceeding further, the next service is the banking service. Now, students, this is again a very important exemption entry. What is the importance? See, this is the most common thing which nearly everybody will have in their books. What is that? Either they are paying interest on what? On the loans advances they have taken, or they are receiving interest on the deposits they have made. So, like, I'm sure many of you all would also be having a bank account in which you may have done FD, or if you're having a saving account, you have deposited money. So you are receiving interest one side. Second, wherever if anybody has taken a loan, we are paying interest on that. Now, what has been made exempt is this interest. Interest either on savings or interest either on loans or advances. What is very, very, very important, students, to note over here is that when we are talking about this interest, nowhere in this entry, that is entry number 27, clause A, nowhere they are only limiting this exemption for bank interest. It is not given that loan is to be given by bank or a deposit has to be made with bank. So you will find that many times we give personal loans. What are personal loans? I give loan to any of my known person because they are in need of money. And against that, I'm charging some interest. So I'm not a bank. I'm an individual. Similarly, we have studied in Companies Act Companies subject to the provisions of Companies Act and SEBI regulations are allowed to raise money by allowing people to make deposits in the company. So the company is accepting deposits from persons, people around, and they are paying interest. Now, here the person paying interest is not a bank, it is a company who is engaged in a manufacturing business, but it has accepted deposits, public deposits, as we call. In such cases, again, whether the interest which the company is paying is exempt, answer is yes. So what I'm trying to make clear to y'all is that kindly do not be misguided, because firstly, the heading itself is banking. Secondly, whenever we say interest, we have a, you can say, understanding in mind that interest is always either paid by bank or paid to bank. But that is not the requirement always, or that may not be correct always. So first thing which I want to clarify in relation to this entry is that three types of interest are made exempt: interest on deposits, loans, and advances. And nowhere it is mentioned that it has to be only a bank interest. Second thing, what is exempt is discounts. I'm sure in your 11, 12 standard, when you studied in accounts, BRS, that is not BRS, sorry, bills receivables and payables. Over there, for the first time, you understood or studied the concept of discount. So there is a concept in trade which is called as bill discounting. What is bill discounting? I have raised an invoice on you of, let us say, 50 lakh rupees. As per our terms, you are going to pay me after 3 months, but I want the money immediately. So what I can do is I can take your bill, which is the proof that I have sold you goods on which you are going to make me payment after 3 months. I'll take this bill to a bank and I will say ask the bank to discount this bill. What is bill discounting? The bank will pay me this money upfront today, and after 3 months, the bank will go and recover the money from the debtor. This is what is bill discounting. So obviously, while doing this, the bank will not pay me upfront the entire 50 lakhs. It will deduct its bank interest, which is called as discount on that particular bill. That is why we call it as bill discounting. Important point to be noted is, out of all interest, the interest which is on the credit card, that has been excluded from this entry. So that is what is taxable. So wherever you are paying interest on credit card, that is what is taxable. Another important point that you should remember along with this, students, is that we have studied in valuation chapter. Again, you'll be studying at the final level, that in valuation, section 15, bracket 2, which deals with additions to the value, says that whenever you are making payment late and your supplier is charging you interest, penalty, or any other amount, why? For making this payment late. So let us say I have sold you goods, I have given you credit of 1 month, you pay me the amount after 4 months. So what I will say, you have delayed the payment by 3 months, so give me extra amount, which may be called as interest, penalty, or whatever. Now, in this particular case, this extra amount which you are going to pay to me, even if we are calling it as interest, it is not exempt in this entry 27, because this interest is neither on deposit, nor loans, nor advances. It is the interest for late payment. And if you see this section 15 to addition list, in that they have covered this interest on delayed payment. Means section 15 requires you to include this interest in the value of supply and even pay tax on it. So another important clarification. So two interests you can say are taxable. One is interest on credit card services. Second, interest where you are delaying in making payment of the consideration of the supply. Next, clause B, what it exempts is, under clause B, the exemption is the charges which are paid for currency exchange. Now, what is currency exchange? So let us say you are an importer. You have imported machinery for which you have to pay 1 lakh yuan. Now, you are not holding this 1 lakh yuan. In fact, our FEMA regulations do not allow us also to hold foreign currency beyond a certain limit. So definitely for getting this 1 lakh yuan so that you can make payment to the supplier outside, you approach either banks or the authorized dealers who are authorized by government to do money change, that is foreign currency exchange. Now, when you get this yuan from the bank or from this authorized dealer, obviously you pay them in rupees and they give you the converted or the equivalent yuan. In such cases, they impose some charges on you. We are talking about those charges in clause B. Now, importantly, when a bank or an authorized dealer imposes this charge on a customer, that is the end user of this currency, it is taxable. Now connect this with definition of service. When we were reading the definition of service, rather goods and service both, money is excluded from both. However, in the definition of service, first it says money and security is excluded, and then it says, however, use of money for which you get interest or exchange of money from one denomination to another, from one currency to another for some consideration is what is a service. So firstly, this entire transaction of money exchange is a service as per the definition of service. Secondly, everything is not exempt. What is exempt is the second leg. So first leg is you as the end user of that currency goes to the bank or money changer and get the yuan, that is taxable. So whatever charges the bank or money changer will levy on you for giving you this yuan in exchange of your currency rupees is taxable. The second leg is exempt. What is the second leg? When the banks or these authorized dealers inter se do money exchange. What is inter se? Inter se means between themselves. So let us say I go to my bank where I have an account and I ask for 1 lakh yuan. Now my bank is not having that 1 lakh yuan. What my bank will do? It will go to another bank, a bigger bank, or a money changer who is having the yuan. So this bank of mine, in order to give me the yuan, is going to some other bank or a money changer and it is purchasing the yuan from there. So firstly, it is doing the money exchange with another bank or a money changer and then again doing with me. Now at both end there are charges. So whatever charges it has imposed on me, that is exempt. Whatever charges the other bank or money exchanger has imposed on my bank, that is only what is exempt. So when there is a money exchange between banks, between authorized dealers, inter se, not with customers, that is amongst the banks, amongst the dealers, or between bank and dealers, that is what is made exempt. Yes, Radha.
Sir, under FEMA, I had read that Section 10 is covering authorized dealers. So they need to exchange the foreign currency amount which they are receiving from the customers, right? From the exporters and all, as far as I remember. So is that authorized dealer contacting with the bank on that case for that sale or purchase? That's what
See,
I'm
it will
asking.
have to now because when they have to again exchange. See, firstly, the FEMA allows these authorized dealers to hold some quantity of foreign currency. Why? Because if somebody comes to them, they should have that currency to give it to them. Correct? But when they are in need of currency, either to sell the currency or to purchase the currency, they will definitely go to a bank. Maybe they may go to RBI directly or to a bigger SBI branch, which is having a huge stock of these currency notes. Correct?
Yes. So
Yeah,
that is exempt.
that is exempt.
Okay,
So
sir.
when they will get it from banks, that is what is exempt because the bank will impose them some charge. Okay. The charge to a customer is higher and the charge to a dealer is lower. So that lower charge which the bank is imposing on dealer, that will be exempt.
Thank you, sir.
Next, now simple entry 27A, service which is provided by a banking company to basic saving bank deposit account holder under the Pradhan Mantri's Jan Dhan Yojana. So in other words, again, this covers the specific services which these account holder gets from bank. The bank will be charging them something for the service. Like, see, there are so many charges commonly which is debited to your account. We call them as bank charges. Those bank charges are exempt here, but only in one case. That is the case of account holders of Pradhan Mantri Jan Dhan Yojana. Now coming to again another important entry. Now what is this entry? Now when you read, there is some confusion because there are some terms like acquiring bank, settlement. Now what is this? I'll explain you. So let us say you go to a mall for doing some shopping. Now when you have completed the shopping and you are on the billing counter, the bill comes to rupees 8,500, and for making payment you give your debit card or credit card. Now what that particular mall vendor is doing, he has a swipe machine. So that person will swipe your card and he will get that intimation that okay, swipe is successful. He will say, okay, boss, your payment is done. You can take your bag and you can leave. In this particular case, what is happening? You are the customer. I am the vendor. When I did swiping of your card is belonging, let us say, to the ICICI bank. And my company or my bank is some other bank. Let us say it is the IDBI bank. Now the machine is given to me by my bank. When I swipe this, these banks have to between them do the money transfer. It is like you giving me check and I depositing my check in my bank, and then my bank will go to your bank and collect the money. And for all these facilities of this swiping machine and also allowing you to use credit card, your bank is charging you for the credit card charges, usage charges. My bank is charging me for this facility. What is this facility? Facility that I can accept your debit card, credit card through the swipe machine. Now this facility which the banks provide me is a chargeable facility, and whatever the bank charges to me, many times you would see this, that when you want to make payment through the debit card, credit card, the vendor says, if you are using card, you'll have to pay me 2% extra. I'm sure you all would have experienced this. So why that 2%? Why that 1.5% extra? Because that is what is the charge the bank is going to impose on the vendor for providing that facility. Now this charge is what is covered here in exemption. Now what it says, that whenever a single transaction has a value up to 2,000, understand, this is the transaction value of the shopping you have done from my shop. So the value of your transaction, if it is up to 2,000, then whatever is the bank charges on that will be exempt. Now in my example, your shopping value was 8,500. So your billing will not be having that exemption. So in your case, whatever will be the bank charges on that 8,500 transaction, those bank charges are leviable to GST. But if the swipe is of up to 2,000 rupees, not exceeding 2,000 rupees, so you are swiping and that single transaction value is not exceeding 2,000, then that is what is made exempt over here. So 34 exempts what? Services given by the acquiring bank. So acquiring bank is my bank. It is giving services to me. What type of service? Settlement of an amount. So you have swiped the card. Now my bank will do everything to get that money into the account. So that service is what is covered over here. Please remember, 2,000 is not the bank charge amount. 2,000 is your transaction amount. So the swipe which you have done, if that swipe exceeds rupees 2,000, whatever is the bank charges on that, those bank charges are leviable to GST. If the swipe does not exceed 2,000, then whatever is the bank charges, that will be exempt from GST. Then there is another service, which is the services by an intermediary. And the service is what? It is a financial service located in a multi-service SEZ. So you would be knowing that nowadays the government is promoting this multi-service SEZ, which is in relation to International Financial Service Center. So now there are, I'm sure you all would be knowing this, Singapore is a main hub, but India wants to create a similar hub in India. So if you would have heard this word gift city in Gujarat, that is where we are trying to create this facility. And hence, in order that these type of transactions start happening in India, they have provided this exemption. Now we go to some important clarifications relating to this entry. First, interest. What is interest? So interest means interest payable in any manner in respect of money, which is either borrowed or it is a debt. And it will also include deposit, claim, or similar rights or obligation. So simply these are the reasons why you pay interest. Further, it says, but does not include any service fee or other charge, because the bank also imposes these fees. Like I was just mentioning about the credit card usage. So the bank charges interest also on credit card. Plus, since you have used the credit card, it is also charging you some fees for the credit card usage. So what is clarified over here is interest will mean only the interest on the amount borrowed or the amount indebted. It will not include the service charge or other charges, which many times the bank will impose. Next, we studied that discount. So we know that practically this concept is there, invoice discounting or check discounting. So it is what? It is a form of discounting, which is to the extent of the consideration. So basically, as I said, I sold goods to you of 50 lakh rupees. Now you will be paying me this after 3 months. So one possibility, I've given you invoice. Second possibility, I've given you invoice. You have also given me check, but the check is after 3 months. The date of the check is after 3 months. Now in both these cases, you are required to pay me only after 3 months, but I want the money now. So in this case, I will go to a bank and I will ask the bank, okay, you take this bill, you take this check, I will endorse it in your name so that now you become the owner of that particular 50 lakhs and you give that 50 lakhs to me. So here, whatever the bank will pay back to me, that will be after deducting the discount, which is the consideration. And that consideration is represented, means called as discount. Correct? So this is another way of giving credit facility. Service charges, service fee, documentation fee, brokering charge, administrative charge, all these are taxable. They are not covered in the entry. The entry covers only interest on the loan deposit advance. Now, this is the point which I was mentioning relating to section 15. So wherever there is interest or delayed payment charges, why? Because the client has delayed in payment. In that particular case, the question is whether it is exempt. The answer is no. It is not exempt as per section 15. However, here we are talking about some different type of delay. So this is delay of what? So any interest delayed payment charges charged to client for delay in payment of brokerage amount or settlement obligations or trading margin. So I'm sure you all know all these are in relation to the share market. For this, the circular or the clarification given is that this will be exempt from GST. But the reason is why? Because this settlement obligation margin facilities are transactions which are in the nature of extending loans or advances. So since in the eyes of stock market, in the eyes of the stockbroker, these are the amount which they have given to you as loan. So when they are levying any interest on that, that is what is leviable to GST, but it is exempt under this entry. So understand the difference. Whenever you have to make payment to your supplier for purchase of goods or services and you delay in payment, that is not a loan given by the supplier, that is the late payment charges. But when the same facility you are getting when you are doing some share trading where you are given the margin facility or the stockbroker many times put his money and allow you to do trading. In all such cases, whatever are the delayed payment charges, they are in the nature of interest because they have extended your short-term loan. That is what is the clarification. Rather, this is what I'm explaining. So let us say you want to do investment in stock market, but you don't have money. As a broker, I tell you what, okay, no problem. You tell me which share you have to buy. I will buy it on your behalf. You pay me after 15 days. That is a loan only, na? Because had I not given you this money, you were not able to invest. What you would have done, you would have gone to a bank and taken a loan, and through that loan amount, you would have invested. I am giving you that extended facility that, okay, I will pay your margin money, I will pay your charges, whatever is not charges, means the amount of shares which you are purchasing, I will pay it. You pay me after 10 days, 15 days, 20 days. So, whenever a broker provides you this type of facility, it is a type of a short term loan, correct? Now, now there are different types of facilities in the market. So, you have the repo and the reverse repo. So repo and reverse repos are financial instruments of short-term call money market that are normally used by banks to borrow from or lend to RBI. So between banks and RBI, the giving and taking of money is done through this concept of repo and reverse repo. That is why many times whenever the RBI is making announcement, you will find in the news the term saying that reverse repo rate has been increased or repo rate has been increased. So that is what is. So when banks have surplus money, they lend it to RBI. When when banks are short of money, they take the money from RBI. Now the question is, since both are giving money to each other for some period of time, whether any interest charge on them will be exempt? The answer is yes, because again, it is in the nature of either loan or deposit. So whenever a bank is in short of money, it will lend it from RBI. When it is as having excess, it will deposit with RBI. So in both cases, the interest that is coming will be covered under this entry and exempt. Then comes the next point, securitized assets. They are in the nature of securities and hence they are not subjected to GST. Another common point, many times when you default in making payment of any EMI, the bank charges you some additional or penal interest. In cases where the EMI, that is the equated monthly installment, is delayed, that is not paid on the scheduled time, you are levied this additional amount of interest or penal interest. The question is whether it will be exempt. The answer is yes. It is also in the nature of interest on loan and hence it will be eligible for exemption. Fine, students. So this is all about the banking entry. Now we come to another sector.
Sir,
Yes,
sir, I need a clarification. Sir,
please say.
in training period, I have go through with the supermarket settlement report. POS, the same you are saying about up to 2000 rupees transaction, the charges on debit card or credit card, the GST will be exempted.
Right.
But sir, in the settlement report of ICICI Bank, I have identified that even the transaction value is less than 2000. They
Hmm.
have charged they have charged their fees along with they also charge GST on their
Correct.
charges.
Correct. See, I'll tell you again. Please, I'll go back to this previous point. See, whenever they are charging, you have to difference between whether it is a service charge or it is interest. That is what is the distinction flowing here. If it is a service charge, see, you have used a credit card. I am imposing that amount because of I am giving you the facility of using a credit card. So that is a service charge. It is not like interest. So if it is service charge, then it will not be exempt. So that is what I'm saying. What type of or what is the nature of the service or the facility the bank has given to you, that will decide the exemption. So what you are saying is perfectly right. Over there, even below 2000, they were levying GST. Why? Because it was not what we have studied here in the entry. It was a service charge, or what we say credit card usage charges. So credit card usage charges is what is taxable. What is exempt is where the vendor who has allowed you to swipe the card, the vendor has to pay to its bank. The vendor's bank is the acquiring bank. The charges for allowing the facility of using that POS machine. That particular charge of transaction value below 2000 is exempt. So we'll have to distinguish between the nature of charges. See, bank today are providing multiple types of services to you. Out of that, only specific 2 or 3 things are made exempt in the entry. Other than that, everything is taxable. Fine, beta?
Sir, actually, I have small confusion here.
Yeah,
Sir,
please
if
tell.
we go to supermarket and we pay through credit card, and for
Yes.
the supermarket, they are vendors, right?
Uh-huh.
So I am talking in point of supermarket. So
Correct.
after 1 day swiping, next day they get a settlement report along with
Hmm.
their amount into bank.
Correct.
So in that they deduct the charges, and
So that is what
for
I'm saying. I understood
specific
your point.
credit card charges they are deducting like GST, not for debit card. Only for credit card they are charging GST.
So again, I'm saying, beta, it is a charge levied by whom to whom. See, this entry, what we discuss, is very specific. The service is provided by the acquiring bank to a person in relation to settlement of an amount. Now, whether the charge which you're talking about is exactly this charge or any other charge, that is
So
what we
this
have to
is the
check.
one.
Because see,
Like,
in this entry, they are saying this charge applies to all types of cards. It may be a debit card, credit card, a charge card, or even any other payment card. Nowadays, we have the Amazon card. So many cards have come in the market. So what is the nature? We'll have to first check that nature. Correct? Because I am
yeah.
damn sure. See, a bank like ICICI, IDBI, all these are now big banks. So they will never make a mistake. They will not unnecessarily charge GST if it is exempt specifically in this entry. Correct? So we'll have to just find out what is the nature of that charge. So if by chance you are still in that training, if you have access to that, you may just discuss with the client, try to understand the nature of the charge. Once you get the nature of the charge, then compare it with this entry. I'm damn sure the charge will not be the one which is covered in this entry. Right, Beda?
And sir, actually we are like we are differencing it from bank charges. Like we are mentioning their merchant discount rate charges, MDR charges.
Correct. That's what I'm saying. So it is a discounting rate charges. It is not this charge. That's why I'm saying do one thing. If you are still in connect with the your training and with the client, you try to understand the nature of the charge from them. Correct?
Okay, sir.
Yes, brother.
Thank you, sir.
Now we go to insurance. Now, insurance, we know there are two types of insurance. One is life, and one is the general insurance, in which you have the other types of insurances. So there is life insurance and then there is other insurance. Now, when we talk about life insurance, there is a very major amendment applicable from September 2025 last year, and it is made effective from September 22nd, if I'm not mistaken, and hence it is applicable to your exam because it was made effective last year only. Now, in this particular category, what we are going to see is different types of life insurance policies which are given exemption. So first is wherever the life insurance is under the national pension system, first that life insurance is exempt. Second, again, the life insurance which is specifically for these groups, Army, Navy, Air Force, their life insurances are exempt. Then life insurance again provided by the Naval Group Insurance Fund to the Coast Guards and all, that is what is exempt. Then life insurance, which is provided by the Central Armed Police Forces Fund, again to their members who are under the group insurance scheme of that particular armed force, that is exempt. Then these specific insurance policies, if you have taken, their insurance premiums are exempt. But students, all this is just for the purpose of academics. What is very, very, very important is the recent amendment. It is applicable from 22nd of September 2025. So it is applicable to your exams. Now, two things have been made exempt: life insurance as well as the health insurance. Importantly, we already saw exemption for life insurance here, but these were specific life insurance either taken by the armed forces or the coastal guards or the navy, etc. This is the insurance taken by you and me. So what this new entry says, that from 22nd of September, if anybody has taken life insurance service, obviously from the life insurance companies, and the person who is taking the service is not a group, in that case, the insurance premium is exempt. Now, for your exam students, what will be very important is to distinguish that when this insurance will be insurance for a group and not for a group. That is where you will have to be, you will be tested in the exams. So let us understand. So what is the explanation? It says that it is clarified that this exemption will apply wherever the contract of insurance is with an individual or individual along with its family. This is what they will cover here. It will not be exempt. Now, importantly, group word is there where the exemption will not apply, but they are not treating the family as a group. So now many times nowadays you'll see we have a single plan covering multiple family members. So that will not be considered as group and that will be eligible for exemption. Important point is the definition of family. Interestingly, if you recall other provisions wherever family word is used in GST or even the income tax law where multiple places family is used, you will find that in some places in income tax law they say family means only spouse and children. In some places they include parents, brothers, sisters. In some places they have put the condition of they being dependent on you wholly, mainly. Here, for this entry, they are saying family will include any person who is insured as a family. That's it. So now here they have not specified the relationship. Whenever you are taking a family insurance policy, whoever is covered in the family, whether the person is dependent on you or not, whether the person is your brother, sister, parents, grandparents, whoever is covered in the contract of insurance as a family. So now it purely depends upon what is your understanding with your insurance company. They are allowing whom to be treated as your family. We will treat them as your family and we will allow you the exemption. Rather, you will get the answer soon. Now, the second service, which is covered on similar lines, is the Mediclaim. So when you are going to pay premium of Mediclaim, again, when it is not for a group, it will be exempt. What will be covered here is this exemption will cover where the insurance is of an individual or individual plus family. And again, family will include any person who is treated as family by the insurance contract. That's it. So both are parallel exemptions. So life insurance and Mediclaim, both are exempted except when it is for a group. Now the question comes, what will be a group? So they have defined group. I'll give you a simple logic. So whenever there is a business relation, or I will say whenever there is a non-personal relation, that group will be taxable. So what is covered here? So for the purpose of both these entries, that is life and health, group means a group of persons who have come together with a commonality of purpose. And most important, they are engaging in some economic activity. Now, what can be the groups? First is employer-employee. Now, in your salary head, you will commonly find this that the employer has taken a group life insurance policy. The employer has taken a group health insurance policy. In fact, it is called as a group only, where the employer and the entire workforce of that particular employer are covered in that particular policy. Such group policies are still taxable. Second, they are saying non-employer employee groups. Now, what will non-employer employee group covers? Simple. Again, I'll take you to accounts. In accounts, if you remember, I think it was in standard 12, we studied something called as joint life policy. You remember this? You studied how the premium will be recorded, whether it will be shown as asset in the balance sheet or whether it will be written off in P&L, etc. Do you recall this? Anybody recalls this from accounts?
Yes, sir. In the partnership, we used to learn GST
Perfect.
policy.
So this was relating to partnership where the firm was taking policy on the life of the partners. That is what is a non-employer employee group. So one very common, employer takes a group insurance policy covering all the employees, maybe life, maybe health. Similarly, firm takes it for partners, company takes it for directors. All these are the group policies which are not exempt. I told you, na, simple logic. Whenever there is a personal relation, that is what is covered in family, exempt. That group policy is exempt. Where it is a commercial relation or a non-personal relation, employer, employee, firm partners, company shareholders, company directors, all that will be taxable. I hope this is clear to all students. Then, relating to the above two cases, that is life and health, if the main insurance company gets this policy reinsured from another company. So reinsurance, you all know. So I have taken a policy. I'm the lead insurance company, but the policy is of 1,000 crores because it is of Tata or Ambani or someone. And I'm very happy because I've got such a huge business, but at the same time, I'm carrying such a huge risk. So if I do not want to carry such a huge risk independently, I will get that policy reinsured from another insurance company. So the reinsurance of the above policies, so where above policies are exempt, the reinsurance of those policies is also exempt. Fine. Student, just give me 2 minutes. Just 2 minutes break. Is asking, does immediate relatives like maternal uncle, wife? That is what is rather important. See, please understand, in this entry only, in the entire GST law, entire income tax law, this is the only entry where they have, you can say, expanded the definition of family to include anybody whom the insurance company allows to take as family. So the insurance company, see here, what did they have said? Family shall include all individuals insured as family in the contract of insurance. Simple. So whoever the insurance company allows to be treated as family, we will treat them as family. This is what is the point. Right, Radha?
Yes, sir. Like IRDA, basically IRDA regulations, they will be following that, I guess. That
No, there is no regulation on this, Radha. Please understand. See, today it is business. Now, I'll give you an example. Let us say some of my distant uncle aunt are staying with me for whatever reason. Maybe their children are not there, they don't have children, or their children are settled outside India. They are all alone. I ask them to come and stay with me. They are my distant uncle aunt, right? Or let us say my distant cousin is staying with me because that person is doing schooling with me, or that person is having job in this particular city where I am. So that person is staying with me. Now, technically, for any other section in the GST law and the entire income tax laws, they will not be treated as your relative, correct? Now comes this point. What is this point? The point is that there is contract of insurance between you and the insurance company. Now, importantly, the insurance company has to take a call whom they want to cover in that policy. See, anyways, they are not doing you any favor. They will be charging that much premium extra. So many times, just for the sake of getting that extra business, the insurance company may allow. So there is no IR, there is no legal point on that. There is no law defining who can be covered in your insurance policy. It is a simple mutual contract. So where a particular insurance company allows even these distant relatives to be included because they are staying with you, that will be treated as family for the purpose of this exemption. Correct,
okay.
Beda?
It's giving that privilege ultimately to the
Sort of.
insurance.
Yes.
Yeah. Okay.
In fact, you know what? I am happy that they have done this. Why? Because see, nowadays, once a family insurance policy is taken, the premium will be single. Correct?
Yes.
Rather, I'm
Yes.
talking
Yes.
to you.
Yes.
Now,
Yes,
in
sir.
that, let us say six people are covered, and had they defined this family to mean a particular people and not include other persons, how would you have broken up the premium to decide how much is premium for the non-eligible person? Because that would have become taxable. Correct?
Yes.
So what they did for practicality, which is appreciable, that they simply said that we are not defining family here. Whoever is covered in that family policy, we will allow them this exemption. That will not be treated as a group for the purpose of this. Simple.
Correct. Why
Correct?
to complicate it unnecessary?
Exactly.
Yes.
Correct.
Yes, sir. Thank you.
Yeah. Then there is exemption for some specified bodies. Now, all these are those governing bodies for some specific type of funds. Now, you have studied many of these again in income tax. So, we have the ESIC, where every month some portion is deducted from salary, some portion is contributed by employer, and that amount is deposited in this fund called as ESIC. And if any employee meets with an accident or is fall sick, so the employee is not able to attend to the work and salary is not given to the employee at such time, this ESIC supports them. Similarly, we have the provident fund. Again, we have studied this: employer contributes, employee contributes, the fund is deposited. Now, when you are depositing this money in any of these funds, like again, National Pension Scheme, I'm sure everybody remembers because this is a very important part in the income tax. In all these cases, we are collecting money by deducting it from salary of employee, plus we are adding our portion, and this total amount we are depositing in that fund. Who is managing the fund? These are those authorities or bodies created under respective acts who will be managing the fund. Now, the services done by these bodies, please appreciate, they do not have any intention of doing any type of business. They are created exclusively for giving benefit to someone else. Like majority of these benefits are for employees. So for giving benefit to employees, these entities and bodies are created under respective acts. So to simplify it, the law says their services will be exempt. So whatever will be their service charge, that will be exempt. On same line of insurance, life insurance, we have general. Again, earlier general insurance had these specific insurance policies which were exempt. Now we have a common exemption which we already studied above, along with life insurance, that is the general health insurance. Then you have different types of pension schemes. Whenever you are making any contribution to any of these schemes, again your contribution, you call it as your premium, whatever is exempt. Which schemes premium is exempt? Atal Pension Yojana, or services by way of collecting contribution under any scheme which is of the state government. So you know Atal Pension Yojana is of central government. Similarly, if respective states have their own policies, that will also be eligible for the exemption. Fine. Now coming to some very specific types of services. Business facilitator. Now what is this? Let me explain you. See, exemption is very straightforward, but many times what happens, it is very theoretical until unless you know practically what is the application of this. So let us say I am ICICI Bank. Now I want to expand my horizon. Right now I'm in all major cities. Now I want to expand to smaller cities, which is called as 2-tier, 3-tier cities, or maybe I want to even go to villages. But the problem is now, at least since past a decade, people have got comfortable with the banking. Earlier, if you go to town places or small villages, you'll find that people did not have the confidence of keeping their money in bank. That is why in villages, maybe even today in some remote villages, people may not be approaching the bank. Now, I, as a banking company like ICICI, wants to expand my business and reach out to even these remote villages. But in this case, I know that it's simply opening a bank in that village will not do, because the people may not have that much trust and confidence in me, because they are not used to keeping their money with someone else. Hence, I need someone who acts as my business facilitator. So who are these business facilitators or business correspondents? You can say that this is a different way of calling or saying that they are our agents. They are more sophisticated. They may be some respectable person of that particular village or that town who is having good reputation, who is looked upon by people in that village or town. So I approach them. I tell them, boss, you help me set up my branch in this rural area. How? So you help me get deposits, you help me get people open account, and I will give you some commission, I'll give you some remuneration. So whatever is the commission remuneration a bank is paying to their business facilitator, who will help them only with respect to a rural area branch, that is exempt. For all other areas which is not falling in the definition of rural, those branches, if I am putting a business facilitator and I am paying them any commission, that will be taxable. Similarly, now it may happen that business facilitator himself may not be able to do everything. So the business facilitator below him appoints another, you can say, sub agent. And now this sub agent is giving services to the business facilitator, again relating to point A, that is setting up of rural branch by a bank. So now whatever commission this business facilitator will give to this sub agent or the intermediary, that is also what is exempt. And then in entry C, again now business facilitator, but doing what? Helping an insurance company to get policies in rural areas. So whatever is the commission remuneration the insurance company will give to this business facilitator who helps the insurance company develop the rural area, their branch, or get policies in the rural area, the commission remuneration will be exempt. Now, students, if you recall, in our first class of exemption, we had studied services given by government. And if you remember, I had given you one sentence to remember the entire exemption entry, that wherever the government is giving service to large business entity and the value of the service is exceeding 5,000, that was taxable. Other than that, other services given by government was exempt. That was, if you remember the rule. Now, in that case, we are talking about the services given by government to others. Now, here it is vice versa. Here, we are giving services to government. Correct? Now, when we are giving services to government, it is the inward service of the government. And this is still only the second entry when inward services are exempt. The first entry when inward services were exempt was education. Education was the first, you can say, sector where we studied exemption for both outward and inward. And the second is government. Now, what is the inward service which the government is getting? There is hundreds of situations. So today we are seeing across India so many infrastructure development projects going on. There is construction of roads, there is construction of metros, there is construction of underground something, tunnels are being constructed. Now, in all these places or in all these cases, what is happening is government is appointing a works contractor. We use this word works contractor, to whom the government gives the contract and get all these things done. So the works contractor is providing service to the government. First example. So hundreds of situations, like if you see any type of infra projects, all are government projects where the government has appointed a contractor to do that particular activity for the government. Second example or second category is, again, I gave you example of this also in previous class. Every day you find roads are being cleaned by some agency. You find that at your doorstep, there is a garbage collection van coming. Now, in all these cases, in our last class, when I was talking about the leg where government is providing you this service and charging you something in the form of that property tax or gharpatti, where it was an outward service by government to you, which was exempt, if you recall. In fact, if you recall, this was the exact reference which we studied. But there, the service was given by government to common public, which was exempt. Now, we are looking at the previous leg. What is the previous leg? The garbage collection van, which is coming to your doorstep every day, every morning. You feel that government is collecting the garbage. Actually, what government has done, it has subletted that work to some outside agency. Again, you can call them as contractor. Now, what are these contractors doing? They are actually managing that entire work. So the government wants to provide you this garbage collection facility service. When government provides you that, that is when government charges you, that is exempt in our previous entry where outward service of government is exempt. But to provide you those services, what government has done? See, first possibility, government had themselves created a department whereby that department would be exclusively doing what? Firstly, purchasing all those garbage van, appointing the drivers, cleaners, everyone, and then managing the whole show. But this is very difficult because managing a whole set of persons, vehicles, etc. is a tedious job. So what government do? They say we will not get into the actual execution. Execution we are subletting to some outside agency. So there they appoint a contractor. The contract may be for a year or two, where that contractor provides these services to government and the government provides to you. Now we are on the previous leg where the contractor is providing the service to the government. So we are now talking about the inward services received by the government. Correct? Now, rather you are asking why exclusion? The reason is this, because the outward service for the same thing is exempted earlier. So when the outward service for the same activity is exempt, they are exempting the parallel inward service. Otherwise, what will happen? If I am not exempting the parallel inward service, then on the inward service, there is GST levied by the contractor to the government. Now, when the government is levying charges to you, that inward GST is a cost to government. So that will be added in your charge. That will unnecessarily increase your burden. So what they have said, that whenever the function which is being performed by these contractors, that function is covered in Article 243G or W. And what this contractor is doing, this contractor is providing or carrying out that function on behalf of government. So the government has appointed the contractor. So contractor is charging the government. We will exempt it because when the same service government is charging to you is exempt. So it is like this: contractor charging to government and government charging to public. Now, if this was exempt in the previous category of outward service, we should exempt this also logically. And why? Again, the logic is not that if outward is exempt, inward should always be exempt. That is not the logic, because in many cases that is not the case. The reason here is because if you observe the nature of these services, these are again the common man services which are required for your day to day, like cleanliness, sanitation, all these things are required for a healthy living. That is why the outward is also exempt and parallelly inward is exempt. So what is covered in this first exemption entry? Pure services. What is pure services? That is, no goods are involved. Now, this garbage collection, what I gave you example, or early morning sweeping the roads, cleaning the roads and lanes, all these are what? These are pure services. Nothing is included in terms of goods. So no goods are being supplied. Whatever is supplied is service. So wherever the contractor is providing pure service, and hence they have excluded works contract. Because if you remember the definition of works contract in GST, works contract always means goods plus service. Like constructing a building is a works contract. Now, for constructing a building, you require both. You require cement, steel, which is the goods portion, and the service portion, which is the labor who are doing the construction work. That is why they have said we are excluding works contract from this, because works contract can never be pure service. So pure services which may be provided by an outside agency to the government. Now to whom? Either central government, state government, or local authority. And what type of pure services provided by this outside agency to government? The services which are the functions entrusted to panchayat under 243G or to municipality under 243W. In short, the daily services that you see outside, the cleanliness, many times you see the, there is a blockage of that, what we call it. They have those sewage lines, and many times during rainy season, the sewage lines get blocked. So you complain, you call the municipality, and the municipality sends the persons who will do the cleaning of that entire sewage line. Many times your pipeline has a problem. Pipeline which is installed gets disrupted. So again, you call the municipal corporation and they will send people who will be correcting that particular problem. So all these works are part of 243W and G. Now, when government charges to you, that is exempt in the outward side. And when government get it done from an outside contractor, that is the inward side, which is exempt. So first was pure service. Now, after this entry was introduced, a practical problem was identified. What is a practical problem? That many times for carrying out these work, it may not be pure service always. There could be some component of goods required. Now, when some component of goods is required, in that particular case, you will never get exemption here because it says pure service, excluding works contract and excluding supply involving goods. We are excluding that. Now, that was giving exemption only to few of the activities, because in other activities you required even goods. Hence, this new entry was added later, and it was added immediately after 3 because it is similar to 3. What they have simply done is, here they have allowed the goods component also with a capping that it should not be more than 25% of the total value of works contract. So now, where the government is taking inward service from a works contractor, and the works contractor, sorry, the works contractor is providing the service, and it also includes goods. I'll say, sir, what is the example? I'll tell you. I just gave you example of all these repairs work. So regularly in some part of the city, somewhere or the other, the sewage line, the water pipeline is having some breakage. There is some choke up, and you require it to be repaired or maintained. Now, what government has done, it has signed an AMC with contractors who will provide their technicians, engineers, who will come and do the correction. So wherever there is any type of problem in your sewage line or water pipeline, you have to call up the municipality. The municipality, respective person will be sending their personnels, these technicians. Now, many times for repairing the pipe, they require some material. So if let us say the pipe is having a breakage, they may require some cement, some type of glue, some type of chemical to fill in the breakage. They may require some type of tapes, etc., to bind that particular two pipes together. So those are the material component which are required. So they have said that if material is required, we will still give you exemption provided the material component is not exceeding 25% of the total value and the remaining part is same. This service is provided by the contractor to whom? To central government, state government or local authority, and it is in relation to a function which is covered in 243G or 243W. So 3 and 3 are copy paste. 3 covers pure service, which was originally introduced. Later on, they found that practically goods will be required. So the goods component is also allowed provided it is up to 25%. Then some specific inward services are made exempt. Now here you will find the names of the day-to-day services which are required. And what is the importance? See, gradually they are increasing. 3 says only service. 3 says goods up to 25%. Now 3B is introduced. Actually, these are already covered in 3B and these are already covered in 3 and 3A. Why they have introduced separately? You will find here there is no limit of goods given. So when these 5 services are provided by some contractor to the governmental authority, it may have any quantum of goods, we will allow it for exemption. So water supply related, public health related, sanitation related, solid waste management related, and slum improvement related. When these services the governmental authority is taking from some outsider, that will always be covered in exemption and it will be covered irrespective of the component of goods involved. Then fair price shops. What are these? In our day-to-day language, we call them as ration shops. So we have this concept called as ration shop, where the marginalized families are provided the grocery items at a very reduced price, like 1 rupee per kg, 2 rupee per kg, 3 rupee per kg. So all these food grains and all are provided with a capping that, okay, you can purchase this much in a month. That is what is a ration shop. Now, the person who is running the ration shop is doing it on behalf of the government only. So government gives that particular, you can say, license to different persons to run ration shop in different areas. So whatever is their commission, whatever is their margin that they are receiving from the government for running these ration shops, that service is exempted. So when these people are raising invoice on government for their charges or margin, that is what is exempt. Next, where services are again provided to any government, relating to what? Relating to insurance. In short, who is providing this service? Some insurance company is providing this service to the government, in which the total premium is paid by the government. Now, what is this? Many times for different category of persons, like I'll give you example, judges. Example, judges are given this facility whereby they are provided house free, they are provided this vehicle free. Similarly, their insurance policies are also free. Why? Because somebody else is paying for them. Who is paying? Government. So when government has taken services from some insurance company, where the insurance policy maybe is of any member of parliament, maybe of judges or any such persons, and the entire premium is paid by the government, these insurances which the government is paying will be exempt. Next, now you all know we have this Skill India program. So under Skill India, what government is doing? Government is hiring different persons, people like us who are qualified trainers, and government is hosting all those skill development programs on their website. So government has a dedicated portal. Let me inform you, in fact, very recently, the government has started one more concept called as Corporate Mitra. And now, if you have heard the 15th August speech of our Honorable Prime Minister has made an announcement that coaching of all these specialized categories like NEET, etc., will be provided free by government. Now, when government is providing you free, government is hiring someone to do these coaching. So for all these training programs, the government may not charge you or may charge you nominal amount, but they are paying because we are professionals. When government is hiring me for any of these programs, corporate mitra, or this maybe the new program whenever it will be launched, government is taking inward service from professionals like us. So whatever we are charging to government, that will be exempt when for these training programs 75% or more of the fees is borne by the government. Now, in fact, as per the new announcement of the Honorable Prime Minister, it may be even 100% that the government will be bearing because you will be given these coaching free. What are important clarifications here? So it is clarified that if pure service or composite supplies are procured by Indian Army or other government ministry or department which does not perform any functions listed in the schedules of the constitution in the manner as a local authority does for general public, the same will not be eligible. So that is what anyways clarified, that only when it is covered into 43 WNG, then only it will be allowed as exemption, otherwise not. Even though it is taken by army or any ministry of the government, until unless it is covering in the schedules of constitution, it will not be exempt. Yes, Radha, you're right. Next, it has been clarified that GST is applicable on facility, which type of facility? Of management agency to MCD, Delhi headquarter for the upkeep of the quarter. So what is this service? See, all these clarifications have come whenever some issue has arisen. So here what issue had arisen, I'll tell you. So all these government departments, they require regular repairs and maintenance. So they hire people who are technicians, who are engineers, who are into all these day-to-day repairs and upkeep of the building. So when they are hiring these people who are giving services to them for what? For either upkeep of the building or for maintaining it clean or for providing any type of security service to the building. So government is requiring all these facilities day in, day out. All those are not covered in the exemption. See, exemption entry will only cover those functions which are entrusted to municipality or panchayat under the article entry 243 WNG. Other than that, any inward service may be taken by government itself, whether central state, it will not be exempt. So similar a clarification was here. Another clarification on these lines is here. Then comes public distribution, which is covered above. It specifically says, or it specifically is covered in entry 28 above. Now what it covers? Different types of ration shops. Now in this particular case, what is clarified? The composite supply of service by way of milling of wheat, fortification thereof, by the miller, or of paddy into rice by a person to the state government for distribution of such wheat flour under the PDS. See, PDS is the ration shop, is also eligible for exemption under entry 3A. So see, entry 28 covers what? It covers the margin received by the ration shop person, that is exempt. Similarly, for providing these things in the ration shop, what government is doing? Government is taking services of somebody else who may be a miller or who may be a person having a small factory unit where what the government is doing? It is converting paddy into rice, or it is milling the wheat so that it can be converted into flour. And this wheat flour or this fortified wheat or this particular rice can be sold through the ration shop. So before they are sent to the ration shop, government is getting them milling done or removal of paddy or conversion of paddy into rice. When all these facilities are taken by the government, it is not covered in entry 28. Entry 28 only covers the ration shop service, but it will automatically get covered in entry number 3 or 3A. 3A more specifically because some goods component is involved. So that will be exempt over there. Why? Because again, getting these facilities or doing these functions are part of Article 243 W and G. Then the next clarification is supply of pure services or the composite supply where the goods portion is not exceeding 25%. What type of service? By way of horticulture, where the value of goods is not more than 25% made to CPWD are also eligible for exemption under this. See again, these are clarification students given for different issues raised to the council. Whenever an issue was raised, the council analyzed the issue and gave the clarification. But in all these, what is common? You have to just test all these things on one lines. Are these services given as a function in Article 243W or G? If yes, whatever is the nature of service, it will be exempt. Further, it is clarified that DMFT set up by state government are governmental authorities and thus eligible for exemption. Similar lines, same exemption is given in case of DMFT. Fine, I think banking is wrongly repeated. Okay. So students, we have covered some major services. Let me proceed further. Now we'll go to some remainder of these services which are remaining in this particular chapter. Okay. Now some more services, students. Next is the leasing service. Now we understand what is leasing. Whenever any land, plot, or any movable property is given on rent for a long term. See, when it is given for a short term, we call it as a renting. When it is given for a long term, it is called as leasing. Now, whenever you give a property on lease, which is on long term rent, you charge an upfront amount. This upfront amount is many times called as the premium for lease. Again, in accounts, I'm sure you all would have done this. There is a specific accounting treatment given how you will record or how you will treat this premium on lease. So whenever you are paying an upfront amount, let us say you are taking my property on lease for 99 years. 99 years means as good as 3-4 generations will be covered in that. So what I tell you is you have to give me a lump sum 50 lakh rupees for this so that I can give you this property on lease of 99 years. In this particular case, the lease amount, not lease amount, sorry, this upfront amount which I am charging to you is called as premium. It may also be called as salami. In some places like in Mumbai and all, it is called as pagadi. So all these are different terminologies used. Now this upfront premium is leviable to GST. However, in one case where industrial plots are given on lease and the lease term is 30 years or more, and it is given by such bodies which are either government or government created industrial development corporations. Like I'm sure in every place, like in Maharashtra, we have this MIDC, Maharashtra Industrial Development Corporation. So every state has their own name. Some people call it as MIDC, GIDC. Like in Rajasthan, it is something RICO. So there are these state government run development corporations or undertakings which are providing these plots on lease to industries. So whenever industrial plots are given on lease by the government bodies and the lease period is 30 years or more, generally students it is 99 years, then the upfront amount is exempt. So this upfront amount, which is also called as lease premium salami, it will be exempt, but only where this plot is an industrial plot and given on lease by the government bodies, in which there is 20% or more ownership of the government. That is obvious because these are government bodies. Second point, what is clarified here is many times since this lease premium is very huge, it may run into crores, you may be allowed by the government to pay it in installment. Now it makes no difference whether you are making payment upfront, whole amount, or you are paying in installments. So far as it represents the premium amount, the salami amount, it will remain exempt. Similarly, many times, besides the main premium, you are charged extra. Why? Because of preferential location charges. Now, what is preferential location? So if you are getting a plot which is road front or which is a corner plot, many times you know that these plots are having higher price, higher value because of being road touch plot, because of being the corner plot. So at such times, besides the main premium amount, because premium is standardized for the whole area, but because these plots are at a specific location, which gives them the locational advantage, many times you are charged an extra amount called as preferential location charges. Now, the question that came up was that whether these preferential location charges will also be exempt if all the above conditions are satisfied. The answer given is yes. Why? Because it becomes a part of the composite supply. So the main supply is of the lease of that particular plot, and in that the subsidiary supplies of the preferential location. So preferential location charges, which is collected over and above the main lease premium, will also be treated as part of the lease premium itself, following the principle of composite supply. And if the lease premium is exempt because all the above conditions are satisfied, even the preferential location charges will be given the same treatment and it will also be eligible for exemption. Now, explanation: for the purpose of this exemption, the central government, state government should have 20% or more ownership in this entity, either directly or through an entity which is wholly owned. So either directly or through the SPV. If you remember, we had discussed this concept of SPV earlier. So either the government directly has a stake there, or through SPV, it is having 20% or more stake in these industrial development corporations. Then the above exemption will apply. Okay, nothing significant here. Now, legal service. Students, we discussed the RCM of legal service. And in RCM entry itself, when we were discussing RCM, I had informed you that before you see the RCM, you should first see the exemption, because what will come in RCM is what is not covered in the exemption, that is what is taxable. Now, when we talk about legal service, firstly, we need to understand what is a legal service. Secondly, it is provided by whom to be eligible for exemption. So either it should be provided by the tribunal or either by the firms of advocate or advocate. Now, when it will be exempt? So the answer is, now I'm using the word legal service provided by whom, either arbitral tribunal or advocate firms. When this will be exempt? When it is provided to non-business. Second, when it is provided to small business. Let me add the word entity. Or when it is provided to government. Now, what is then automatically falling in taxability? So all this is exempt. So what will be taxable? When this same legal service is provided to large business entity, this is the only one case where it becomes taxable. Now again, what is a small or large business entity? Same what we saw in government entry. The entity whose turnover is below the registration limit are small entities. And the entities whose turnover are exceeding the registration limits, they are large entities. Now, what is a non-business entity? Because in your exams, the case study that you'll get will be mainly distinguishing the business entity and non-business entity. To understand that, I am a professional, I am a chartered accountant. I go to a lawyer and I say that there is a dispute going on my family property, it is inherited property, and I have a dispute with my other, you can say, relatives because they are also claiming rights on that inherited property. Now, when I go for this dispute to the lawyer, even though I am a chartered accountant, I am going there in the capacity as Vishal Poddar individual, not Vishal Poddar chartered accountant. So when I take legal services from the advocate or advocate firm for my personal property dispute, for my family property dispute, that will be where it will be said that the advocates have given their legal service to non-business entity. But let us say I have to file a case on one of my clients because that client has not paid me my fees, or I have to file case on some other professional because of some professional misconduct conducted by that other professional. Now, whenever I am filing case on some other professional for their professional misconduct or on my client, over there, I'm going to the lawyer in the capacity as Vishal Poddar chartered accountant, that is Vishal Poddar businessman. That is where I will fall in the category of business entity. In that case, if I am liable for registration, then I become large business entity. The service provided by the lawyer to me is taxable. This is the only one service of lawyer which is taxable, and it is taxable under RC. But where I have gone to him as Vishal Poddar individual because it is relating to my personal property dispute, or even if I have gone to him as Vishal Poddar chartered accountant, but my turnover is below 20 lakhs, that is, I'm not falling in the registration limit. In that case, the services provided by the lawyer either to Vishal Poddar as individual for family property dispute or to Vishal Poddar as business entity, but Vishal Poddar is a small business entity, it is exempt. So the exemption is for legal service provided by whom? Either tribunal or by advocate or firm of advocates. What type of service? Service of law or legal service provided to person who is not a business entity or who is a business entity but whose aggregate turnover is eligible for exemption from registration, or to government. Same things here. Exemption is provided where legal service is provided by an advocate or a firm of advocates to whom? To other advocates or firm of advocates, or to person other than business entity, or to a business entity who is a small business entity because the turnover is eligible for exemption from registration, or to government. Now, interestingly, within advocates, there are two categories. You may be a senior advocate, you may not be a senior advocate. Now, if you are a senior advocate, then when your services are exempt, when you are providing services to other than business entity or to a small business entity or to government. What is not in exemption, please remember, senior advocate giving service to other advocates. This is taxable. And most interesting point, students, a misconception is that whenever legal service or lawyer services are taxable, they are always under RCM. No, this is the one service of lawyer which is taxable under FCM because on both sides there are lawyers. So this service of lawyer is taxable under FCM. Please understand, when a lawyer or a law firm, which is not a senior advocate, when they provide services to other advocates, that is exempt. So there is no question of FCM. But when a senior advocate is providing a legal service, here you are not covering services to other advocate firms. So when senior advocate provides services to other advocates, that is a taxable service. And if you read the RCM entry, it is also not covered in the RCM. So it is taxable under FCM. It means the senior advocate will have to register and pay the tax. Yes, Radha.
Sir, like advocates and advocates between the group of advocates, it is exempt, right?
Only if the service provider is not a senior advocate.
Okay, okay, got it.
This provider is a senior advocate, the service between advocates is also taxable, and that is taxable under forward charge.
Okay, sir. So it is vice versa, like senior advocate to the advocates or advocates providing to senior advocate.
See, generally that will never happen.
Just asking, sir.
That is also, see, that is also exempt because you have three categories of exemption. in which first is where services by tribunal and second and third category is service by advocates. Now, whenever service is provided by an advocate firm which is not senior, it is provided to any advocates, it is always exempt. So non-senior providing to senior is always exempt. Senior to others is always taxable. So seniors to other is taxable, vice versa is exempt. Correct?
Okay, sir.
Now coming to definitions, firstly, what is exempt is legal service. Now what is a legal service? Legal service means any service. Now when they say any service means what? It may include a representation service, it may include advice, it may include consultancy, assistance, anything. So any type of service where it is relating to a branch of law. Now see, taxation also is one type of a law, constitution is another law, contract act, all these are different branches of law. So when any type of advice, consultancy, representation services are given by an advocate or a tribunal, that will all fall in the definition of legal service. Now, who is an advocate? Like how in chartered accountants, once we qualify as chartered accountant, we if we want to run our own practice, we have to take certificate of practice. And once we apply for certificate of practice and it is sanctioned, our name is entered in the institute's register as a COP holder. Similarly, advocate means that advocate who has taken the certificate of practice. In other words, their name is entered in the roll of the Bar Council, which is under the Advocates Act. Arbitral tribunal means the sole arbitrator or panel of arbitrator, which has been set up under the Arbitration and Reconciliation Act. Now, interesting is the definition of senior advocate. Now, see, in our CA profession, you know that there is a concept called as FCA and ACA. So, when you are newly qualified in your first 5 years of practice, the institute calls you as ACA. And once you have completed 5 years of practice, you become FCA. So, in case of all our professional institutes like CA, CMA, etc., general rule is 5 years of practice, 5+ years of practice, you become senior. So we don't use the word senior CA, we use the word FCA. So if somebody is FCA, you understand that that person is having a service of more than 5 years or practice of, sorry, more than 5 years. Whereas in case of advocates, that is not the case. Advocates are designated as senior only by the Supreme Court or High Court. So simply because you have completed any number of years of practice as advocate, automatically you do not become entitled to be treated as senior. So you will be treated as senior only when you are designated as senior advocate by the Supreme Court, High Court. And on what basis they will designate? They will see your standing in the various judgments. So how many times you have represented, how many judgments you have handled, and they will see the knowledge or experience that you are commanding. On that basis, the court will decide whether or not to designate you, that is whether or not to give you the status of a senior advocate. So becoming senior advocate is altogether a different process than what is becoming senior professional. Fine. So here I'll take a break. After the break, we reconnect for dealing with the other entries. Thank you. The next exemption is for sponsorship. Now, sponsorship in specific sporting events. Now, what are specific sporting events? Events which are organized by one of these bodies, National Sports Federation. 1 second, shoots. Yes. So, sporting events organized by National Sports Federation or Association of Indian Universities, Inter-University State Boards, School Games Federation, All India Sports Club, or Central Civil Service, and these are part of national games organized by Indian Olympic Association or under the Panchayat Yuva Krida or Khel Abhiyan scheme. If there is any sporting event in one of these cases, then sponsorship done by businesses in those sporting events will be fully exempt. Then skill development. So services which are provided by any of these bodies which are directly related to the government's skill develop India mission, that will be exempt. So whose services are exempt? By the National Skill Development Corporation, National Council for Vocational Education, then bodies who are doing what? They are awarding the recognition. So National Skill Council or vocational education training are exempt, and the bodies who are recognized by these will also be exempt. Then second is the assessment agencies recognized by these bodies is exempt, and the training bodies who are accredited with the councils is also exempt. So the council is exempt, and whoever the council will recognize either as the awarding body or the assessment body or the training body, they will be exempt. And now even individual trainer like us who are approved by the National Skill Development Corporation under the Skill India Mission, we also will be exempt. So whatever charges we are levying to the government or to any other body under the Skill India Mission, that will be exempt. Similarly, the assessing bodies who are empaneled by the Directorate General of Training, Ministry of Skill Development, again, these assessing bodies are exempt. So these are all complementary exemptions. Further, services provided by training providers under the Deen Dayal Upadhyay Gramin Kaushalya Yojana. So that is also exempt. Now, students, coming to an important exemption entry for your exams. So many times you find that various artists, they give their performances and they charge a fee or a remuneration for their performance. Now, their performance remuneration will be exempt if two main conditions are satisfied. First, the performance is in the folk or classical art forms, not in the Western, and it is a performance of music or dance or theatre. So we know Bharatnatyam, Kuchipudi, all these are our classical art forms. And then we have certain folk art forms from various specific regions of India. So if you are giving a performance of music where you are only playing the sitar, veena, etc., or you are giving a dance performance in any of these forms, which are either classical or folk, that is what is exempt. So two conditions, it should be in folk or classical form, and it should be the performance of music, dance, or theatre. Now, what will be the most important criterion is the monetary consideration. It will be exempt only when the consideration does not exceeds 1,50,000. In short, if the consideration exceeds 150, it will be fully taxable. So exemption is limited only where the remuneration is up to 1,50,000. Now, interestingly, there is an exception to this. What is that exception? So wherever you are a brand ambassador, one second. So the exception to this exemption is where you are a brand ambassador of any company and you are giving this performance in some promotion event of that company. So example, let us say Hema Malini ji, who is a renowned artist of Bharatnatyam, if she is giving a performance in a regular program and she is charging a consideration, and for the time being, let us assume her consideration is 1,45,000, it will be exempt. But where Hema Malini ji is also the brand ambassador of Patanjali, and there is some marketing or promotion event conducted by Patanjali. In that, she is invited because she is a brand ambassador, and over there also she gives a performance of Bharatnatyam where she is paid her remuneration. Now here, even if the remuneration is 145, that is below 150, it will still be taxable. So for exemption, an important carve out is that you should not be giving this performance as a brand ambassador in some promotion event of that particular brand. Further, what has been clarified that all other activities by the artist in other art forms like Western or modern or in films or in television serials would not be eligible for this exemption. This exemption is only in the cultural or the folk form. Secondly, further activities in still art forms like you are doing painting, sculpture, etc. They are also not exempt. So only in music, dance, or theater. Other than that, any other art form is not exempt. And whenever it is done with relation to Western or modern music, or you are doing performances in films, etc., it will be taxable. Then students, coming to another important exemption entry, which deals with the fees that you pay whenever you go to a particular event or you visit a particular monument or you are going to zoo. So there is some entry fee. That is what is the fees for right to admission. So we call it as entry fee. We call it as the pass. And that is for allowing you to attend that particular event or visit that particular monument. So you have some entry pass, you have some entry ticket. That is what is covered here. Now, first, whenever you are going to a museum, national park, wildlife sanctuary, tiger reserve, or even a zoo. So the first exemption is for the entry fee to these places. Second, where you are going to a protected monument, which is declared as protected monument under this specific act. So there is some entry fee to that monument. That is also what is covered for exemption. Then, when you go to a circus, a dance or a theatrical performance, or you go to an award function, concert pageant, or you go to a recognized sporting event, or you go to a planetarium. Here, the exemption to the entry fee is applicable only where the fee cost or the entry ticket price is not exceeding 500. Now, what is a recognized sporting event? It means a sporting event organized by recognizing sports body. What is recognized sports body? Recognized sports body are the same which we saw in the sponsorship: Indian Olympic Association, Sports Authority of India, National Sports Federation, National Sports Promotion Organization, International Olympic Association, or any other federation or body which regulates a particular sport at the international level. All these are recognized sports body in India, and if they have organized any type of sporting event, then entry to that event is eligible for exemption provided the entry ticket is not exceeding 500. So entry tickets which are priced below 500 are exempt. If it is above 500, it will be fully taxable. Next, another important category: services by unincorporated body or a not-for-profit entity. Now here, students, what will be covered is the services of trade unions, services of our where we are staying. So in our society, in our housing society, we charge maintenance fee to every member of the housing society. That is also what is covered here. So what is covered in this particular category? First, services given by unincorporated body or a not-for-profit entity which is incorporated under any law for the time in force. To whom? To its own members. Now, what type of fees it is charged? It is the contribution. First, the person charging is a trade union, or second, not or, and for providing of any services which is relating to carrying out any activity which is exempt from levy of GST. Now, this is for trade unions. What is applicable to all of us is wherever you are staying in a housing society or a residential complex, and where the housing society is charging to its members the monthly maintenance, and this monthly maintenance is not exceeding 7,500. So monthly maintenance up to 7,500 charged by the housing society or the residential complex to its members for the common use of the housing society facilities like lifts, like the watchmen or security, etc. That is what is exempt. Now, similar to trade unions, there can be other unions like unincorporated body or a not-for-profit entity registered for what? Which are engaged in activities relating to welfare of industrial or agricultural labor or of farms. So similar to trade union, but some other specific bodies. Second, those who are engaged in promotion of trade, commerce, industry, agriculture, etc. And they are providing services to their own members, and where the consideration is not exceeding 1,000 per member. That is what is exempt. So they have defined all these cooperative housing society. We have seen this. We also call it as the Resident Welfare Association, RWA. So wherever the housing society or RWA is providing the common facilities to its members, and for that common facility, what they generally charge is the monthly maintenance. So monthly maintenance up to 7,500 is what is exempt. If it is exceeding that, it will be liable for GST. Now, there are some clarifications first. If the aggregate turnover of this housing society or RWA, which is providing services to its members, is above the registration limit. Now we know the registration limit is 20 lakhs for services. It will have to take registration under GST under section 22. However, taking registration does not mean that the housing society has to compulsorily charge GST. Why? Because even if have taken registration under GST, if what you are providing is an exempt service, it will always be outside. So, for instance, in this 77C entry, which is for the housing society, services are supplied by the housing society to its own members by way of reimbursement of charge or share of contribution up to an amount of 7,500 per month per member for providing service and goods for common use. That will be eligible for exemption if the amount is not exceeding 7,500. If the amount exceeds 7,500, then the entire amount is taxable. This is a very important point. Again, students, there is some dispute revolving around this. There are few AAR rulings. There are few high court judgments where there is a dispute on this, where the question is, let us say if your monthly maintenance is 10,000, should you charge on entire 10,000 or only 2,500? There is a dispute. CBIC, through its all circulars, have always clarified that it will be on entire 10,000. However, judiciary in some cases have said no, it will not be on entire 10,000, it will be only on 2,500. So that is another dispute which is common in relation to the housing society monthly maintenance. Also, where the housing society is not providing any service other than the exempt service, then even if their registration, even if their turnover exceeds the registration limit, they are not required to take registration. Now, this I'm sure students, you recall section 23 of the CGST Act, which has given the specific exemption from registration, where what does section 23 says? That even though you are having turnover exceeding section 22 limits, but you are engaged exclusively in supply of any exempt goods or service, then irrespective of the amount of turnover, you will not be required to take registration. So this is what is the summary given of this entire point. That's it. Now, Taxability of different type of charges which are collected by the society. Now, the society, besides the monthly maintenance, may have a charge for all these things like property tax, water tax, non-agriculture tax, which is called as NA tax, electricity, sinking fund, repairs fund, car parking, non-occupancy, and also interest if you are making payment late. Now, the question arose was whether all these are also eligible up to 7,500. So CBIC has clarified saying that services provided by government to a person other than business entities exempt from GST. That is why property tax, water tax, if collected by RWA on behalf of government from individual flat owner, then it is also going to be exempt. So where there is property tax, where there is water tax, which is levied by government on the society, and the society is collecting the same amount from its members, that is exempt. Further, GST will not be applicable on any tax, electricity, etc., which are collected under other statutes from individual flat owners. However, these charges, if they are collected by the society for generating electricity by the society generator or to provide drinking water facility or any other service, then they are taxable. So where you are getting electricity from some electricity board and that same electricity you are providing to your members, that is exempt because the electricity provided by board is also exempt. But where you are having your own electricity generation, now many big societies have now their own generating plant or their own generating unit whereby they generate the electricity and provide it to members, that will be taxable. Then sinking fund, repair fund, car parking, non-occupancy, or interest. All of these are leviable to GST as these charges are collected by the society for supply of services to their members. So these will not be outrightly exempt. Yes, you can definitely cover them in 7,500 limit, but they are not exempt by default. The above two cases are exempt by default because they are specific charges either levied by government or electricity supply companies which are already having exemption. Other than that, all these charges which are in point number 3, they are not exempt by itself. Yes, they will be entitled for exemption within the limit of 7,500 per month. Now we come to some remaining services which are not part of any particular industry or category. What are they? First, when you sell your entire business as a going concern, now it may be your entire business or an independent unit. So let us say you are having 4 manufacturing units. You transfer one unit to someone or you transfer the whole business to someone. Now students understand this. Let us say I am running a hotel. Now I do not want to continue running the hotel. What I can do is I can close down my business and then I can sell off the assets of this business piecemeal. That will be leviable to GST as per normal provisions. However, if I do not close down my business and I transfer the business as a running business, so what I was running till date today, from tomorrow you will be running the same business. That is what is transfer as a going concern. Means I have not shut down the business, I am transferring the running business. In such cases, transfer of the running business is what is covered in this exemption. So, transfer of business or a lump sum consideration is normally called as lump sale. That will be covered in this particular entry. Such sale of business as a whole will comprise a comprehensive sale of different items. So it may have immovable property like land, building, and various machines, stock in trade, etc. And also transfer of unexecuted orders, employees, goodwill, etc. Since the transfer in title is not merely a transfer in title of one of the items, that is immovable property or goods or both, it may amount to service and hence exempt. Now this is what is the clarification given even in Schedule 2. So Schedule 2 says when you're transferring the whole business as one entity without making a breakup of individual items, it becomes a slump sale of going concern business and it will be treated as supply of service, and that service is what is exempt over here. Yes, Radha.
Sir, here the transfer of going concern, does it mean that it is compulsorily being carried out by the other person?
Exactly. That is what it will be going concern. Huh?
It is not like a succession, right? It's other independent party who is purchasing. as a
It can
part
be
of
succession
succession.
also. See, even
Acha.
succession is covered here because succession is also transfer of going concern. Na?
Yes, yes.
So
So,
succession
okay.
is also covered. So the
So that
mode of
bifurcation
transfer is
is not
irrelevant.
covered. Yes, yes. What, sir? I didn't get you. Sorry.
I said the mode of transfer is irrelevant. So it may be outright sale of business or it may be by succession, inheritance, makes no difference.
Okay, sir.
Next. Now, whenever you are doing transport service, and this transport service is for transferring the goods to Nepal or Bhutan, which are also called as landlocked countries. That is what is covered in this exemption 9B. Now, here it is clarified that this entry covers only those services which are associated to the transit cargo, either to or from Nepal and Bhutan. Movement of empty containers. So let us say I've sent a container load to Nepal. Now it is coming back. Now, even for return, you charge. In such cases, after the delivery of goods, the service is associated with transit cargo and therefore covered in exemption. So that is why the word you have to be very clear with. They are saying services which are associated with transit cargo. So not only the actual transportation of goods, but any service which is linked to that, like return of the empty containers, that is also associated to the main transit of goods or main transfer or the transportation of goods. Hence, that is also covered in this entry. Then come students, very, very important entry for exams. Now, firstly, this entry was very small. This was only up to this point. Then later on, over the last 4 years, different limbs got added in this entry, and now we have such a huge entry. Now, what is this entry? Let us understand. So, you are having a residential house and you have rented it for use as a residential house. So, what is the main entry dealing with? Residential house given for use as a residence and not as office. So, if there is a flat which I am giving on rent for staying, that is for residence, then it fits in this exemption. If there is a flat which I'm giving to you to be run as office, it will not be exempt. So two things, the property should be residential dwelling, that is, it should not be a commercial place, so it should be a residential unit, and it should be given for residence. Now this was the old exemption entry. Now later on, this part got added that where you are giving residential unit for residence, but it is given to a registered person, it will be taxable. And let me inform you, this is what is taxable under RCM. So understand this point. I am the landowner or the owner of that flat. I may be registered or unregistered, it makes no difference. When I'm giving this flat to you for residence, so flat is a residential dwelling and I'm giving it to you for stay purposes, not for commercial use. In that case, if I'm giving it to unregistered person, it will be exempt. If I'm giving to a registered person, it will be taxable and it will be taxable under RCM. So I am outside GST in all cases. So a flat owner giving its flat for residence is always outside GST. It will not be required to pay any GST on this flat service. If it is given to unregistered, anyways, it is exempt here. If it is given to registered, it is not exempt here, so it is taxable, but that too is taxable in the hands of the recipient, not in your hands. This is clear? Now, after this amendment had come, that where I am giving my property to a registered person, it will now be taxable. A practical problem arose. What was the practical problem? Let us say this registered person is a proprietor. Like I am registered as an individual consultant. So I am CA Vishal Poddar registered with GST as an individual. So we say it is my proprietary ship form. Now, you know there is no difference in the eyes of law between a proprietor and a proprietorship firm. Correct? Now I am taking your flat on residence. Technically, I am a registered person because there is no difference between me and my firm. And this particular leg is satisfied. So this renting service becomes taxable. But the problem was I am taking it on rent for my dwelling and it is in my personal capacity, not in my capacity as a chartered accountant, but in my capacity as Vishal Poddar. So if you read this entry technically, it would be taxed. So to avoid this, they had first brought a circular clarifying this, and later on they added this explanation in this entry itself that where this registered person who's taking your flat on rent is a proprietor. The person is registered in his own individual name with the GST, but the person has taken this for residence. That is, he is going to use it for his or his family's residence, and it is in his personal capacity, not on account of his business. It means I am not showing this rent in my books of the proprietorship concern. So it is not reported as a business expense. If both these conditions are satisfied, that I am a proprietor registered under GST, taking this residential dwelling, but in my personal capacity, and this will not be recorded as an expense in my books of accounts of the proprietary concern, then the exemption continues. So the position is like this: a flat owner giving his flat for residential purposes to an unregistered person is always exempt. To a registered person will be taxable only where the registered person is taking that flat in the commercial capacity, not in the personal capacity. Or in simple words, in more simpler words, the person is going to show this expense in its books of accounts as a business expenditure. So this rent is reported as a business expenditure, then this particular entry or this particular situation will be taxable. If you're reporting this as your personal expenses, as a drawings of the business, because it is personal, it will not be taxable. It will be exempt even though the recipient is registered. So this is the distinguishing point, students, you have to understand and keep in mind. Now, further, after 2 more years, after all the above amendments, after 2 more years, one more amendment was brought in. Now, this amendment was brought in relating to students' hostel. Now, we all know there are hostel for students, there are a hostel for other working professionals, etc. Now, the question was whether hostel for students are covered in this exemption entry. Interestingly, there were multiple disputes. There were AAR rulings, which were obviously in favor of the department. And then there were High Court judgments. The very famous one is of the Honorable Chennai High Court in the case of Thai Mobamba something. Now, in that judgment, which followed the Karnataka judgment of Tagwar, in both these judgments, the Honorable High Court said that the word residential dwelling and residence is very wide, and it will even cover the residences in hostels. So hostel residences, they said, will be covered in this entry. Later on, when this matter went to Honorable Supreme Court also accepted the same decision. Now, because of this, the position was that student accommodation or student hostel also got covered in this entry. But the lawmaker wanted to have a different treatment of student accommodation or hostel. So they added this explanation too after these judgment, saying that the above exemption entry will not apply to the accommodation services given to students in student residences, you can call it as hostel, or accommodation services provided by various hostel camps to PG, paying guest. So these things will not be covered here. Why? Because they wanted to provide a separate exemption for these hostels. So now for hostels, you have a separate exemption entry. So firstly, they are excluded from this. But let me inform you, because of these Karnataka and Chennai High Court judgment, also accepted by the Honorable Supreme Court, technically residential dwelling and residence covers hostel. But now they are specifically excluded from this entry. So now they will not be covered. Yes, they are still exempt, but under a separate entry. This we have already discussed. So when it is provided to unregistered, it is always exempt, and when it is provided to registered and the registered person is showing this as a commercial use, that is showing it as a business expense, then that will be taxable. Otherwise, if it is showing as a personal expense, it will not be taxable. Now, coming to that new hostel entry. Now, what is a new hostel entry? It says supply of accommodation service where the value of supply is less than or equal to 20,000 per month per person. And the second condition is we are giving it for a minimum continuous period of 90 days. That is roughly 3 months. So what it says, wherever the accommodation service is given for a continuous period of minimum 90 days and the per month charge, per month per person charge is not exceeding 20,000, that service is exempt. Correct? So that is what is the exemption for hostel and similar type of PGs where people stay maybe for their education or for their future employment purposes, and they are staying there continuously for minimum 90 days. Then the exemption will apply if the monthly rent does not exceed 20,000. Next, transportation services were done by aircraft and where to where? From a place outside India up to the custom stations in India. So where you are importing goods by air, the air freight is what is exempt if it is for international travel. No, rather that 2 months advance has nothing to do with this point. See that 2 months is many times they take 2 months, many times they take 6 months. Recently, I was looking for a place in Mumbai, so they are saying 1 year rent has to be paid in advance. So that is their not advance, rather they call it a security deposit because I'm going to stay in your property. If I misuse it, if I damage it, they should be able to recover the damages. That is where they are taking that advance.
Okay, so even like for a month also, if they are staying, then it will be taxable in a GST.
Yes, yes, yes. It has to be minimum 3 months.
Okay,
Because see what is the distinction? See, in all these judgments which I mentioned of the Karnataka and the Chennai High Court, what the Honorable Court said that what is accommodation as a residence, which is the main entry number 12 covering. So when you stay at a place over a long period of time, as your home, as your house, where that becomes your normal, regular habitation place. Like if you have to tell your friend where to come, you'll say, okay, I'm staying here, come here. So it is your regular place of accommodation. That is what the Honorable Court said fits in the definition of residence. Now, there was no criteria as to what will be called as a regular place of registration and what will not be called as a regular place, like a short stay. So short stay is when you go to a hotel, when you go to a resort, you stay over there for a short period of time. Now that is always a lodging, that will never be called as a residence. This was the distinction brought about by the courts. However, this was not having any time boundage. So this particular entry was brought in 12A, which said that minimum 90 days if you are staying at a place, we will treat it as a residence. If you are staying for less than 90 days, it becomes like a lodging or a hotel. So lodging or a hotel is taxable, but where you are staying at a place permanently, and permanence according to them is minimum 90 days. Now, interestingly, from where did they get this 90 days criteria? That is coming from the earlier service tax law education guide. So in the earlier service tax law, where similar entry was there, already the CBEC at that time, today it is CBIC, at that time it was CBEC, it had issued an education guide. In that education guide, it has given the criteria that how will you decide whether it is a hotel or a lodging and it is not a residence, because see, you are staying in both places. What we want to exempt is residence and not hotel or lodging. So over there, they had brought this criteria of 3 months or 90 days. So now, when disputes arose, and the Honorable Court said, no, no, even hostels are like residence because you stay over there for a long period of time. It becomes your second home. Or in fact, students and working professionals, that is what is their house. See, you could have rented a flat, but because of the scarcity of the amount money, because you are still a student or you have just started your job or business, and that city may be having costly flats, so right now you are not staying in a flat, you are staying in a PG, you are staying in a hostel. Tomorrow, once you have a decent income, you will shift to your own flat again, which will be covered in 12. Then why not covering hostel and PG in 12? So that is how the Honorable Court said that staying in a hostel or PG is also equivalent to staying in a flat. That is, it is a residence, hence covered in entry 12. But the lawmakers did not want to have this type of broad interpretation. So they brought explanation to saying that we will remove the hostel part from entry 12 and we will make a separate entry 12. So that is whole you can say the story and the history behind how this exemption entry 12 got so much extended and how the new entry 12A has come.
Yes, sir. Got it.
Yeah. Now, students, you all know that today India is becoming a hub for launching satellite for the world. And now not only the domestic or the government companies, now we have even private startups who are doing the satellite launch. Recently, we had news of Skyroot, so which is a startup, and you see the owners, they are very young. The average age is 30. So they are running that startup and they successfully made a launch of satellite. So this satellite launch, whenever we are doing for any other person, obviously we'll charge it because it is very costly. But since the government wants to promote this satellite launch service by anyone, here they have not given only by ISRO or a government undertaking, by anyone, even by private, will be exempt. Then comes this entry, very, very interesting. Now we have seen earlier that passenger transport, GTA, these are taxable. And within that, there are some exemptions like of specified goods, transport is exempt, or passenger, in case of passenger, non-AC transport is exempt, and remaining are taxable. Now, what is entry 22? Entry 22 is dealing with giving on rent what? The vehicle to be used for this transportation. So where I am giving the bus on rent to the state transport corporation. Now every state has their own what we call as public buses. And if I remember very clearly in that previous class only, when I was explaining someone the concept of SPV, I had said that today, nowadays, government is not itself buying the buses. What it does is there is a SPV. Government either has a share in that SPV or it may not have a share. It is asking that SPV to purchase all the bus and the government takes the bus on rent. Now, when the government is taking the bus on rent, the rent charges levied by that SPV to government is what is exempt over here. Now, see, they have not used the word bus. Why I'm using the word bus? Firstly, because it is for passenger transport, and secondly, it is a motor vehicle which carries more than 12 passengers. So more than 12 is automatically a minibus or a bus. So wherever government is running their own state transport, which we see in every state, we have every state's government buses now. And now, interestingly, in majority of the states, we are now having the electric buses. So governments are not purchasing them; they are taking on rent. The rent charge to government for these buses is exempt under this entry. Second, when these buses are given to local authority. So let us say local authority in some places is running the buses, and which buses? The electrically operated buses like how we are having today. The entry covers the renting of such electric buses even to local authorities. Again, the rent will be exempt. Next, what is exempt is trucks. So when I am giving these trucks to a GTA. So what GTA is doing? GTA is providing the goods transport service. But for providing these services, the GTA needs truck. Now, one, the GTA can purchase the truck. Two, the GTA can take the truck on hire. So whenever I am providing the trucks on hire to a GTA, which will be used by them as a means of transportation of goods, that is what is exempt. Just a minute, Shu. So like how in the first two entries, giving of bus on rent was exempt. Here, giving a truck on rent to a GTA is exempt. And finally, again, giving a bus. Again, here bus is meant for what? Passenger transport. But whose passenger transport? So we saw an entry of education service where the school is providing outward service to its students, faculty, staff. Now that outward service can be any outward service, including transport of students. So when school is providing the transport service to students, faculty, that is exempt. But for running this transport service, they will require buses. Now these buses are given on rent. For what? For that transport of students, faculty, staff. So this renting service, where the bus is given on rent to the school or to that agency who is providing the transport of students service, that is what is exempt. Next, we pay toll charges. Remember this. Remember means you experience this every time you go to different places and then you are paying toll charges. These toll charges, students, are also exempt under GST. Yes, you're right, beta, Yogendra, that if buses are taken for occasions such as marriage or meetings, etc., that is not exempt because that is not fitting here. See, only two cases renting of buses exempt. One, given to the government for running their state transport facility, or given to schools for transportation of students. So all other categories where you are taking bus on rent, like for a marriage function or for your company meetings where you have to take the delegates to a place, that is all taxable. Correct. So toll charges that we pay are exempt. Next, now comes electricity. Students, interestingly, earlier we had a single board, like in Maharashtra, we had the MSEB board. We used to call it as a board. I'm sure you all know later, these boards were bifurcated into three companies. One is the generating company, one is the transmission company, one is the distribution company. Now the single board is converted into three companies. Now, the role of the generating company is to generate electricity. When they generate electricity, it is in the nature of goods. Interestingly, you will find no GST on the electricity bill. Why? Because electricity, when sold by the generating company, it is in the nature of goods. The rate of the supply of these goods is nil in the rate schedule for goods. But we require the transmission and distribution companies also, because ultimately these are the companies who install all these facilities by which the electricity comes to our doorstep. Now the charges for these are separate from this. So electricity is goods, but the charges for the transmission and distribution is a service. So as I said, these goods are also exempt. That is, the electricity itself is exempt because of nil rate in the goods rate schedule, and plus the charges which are levied by these transmission and distribution companies, which is a service of providing the electricity to our house or to our office, that is also covered in exemption over here. So what does 25 entry covers? The transmission and distribution of electricity done by these transmission and distribution utilities. That is what is exempt. Now here, an issue came up that many times, besides the regular electricity bill, you want some more services or facilities from these companies. Now these companies, for the time being, let us we call them as discoms, that is the distribution, etc. companies. Now these companies are charging you for all these other facilities, like you want to release the electricity connection, or you are charged with the meter rent, or at times when there's a meter is having a problem, you ask them to send a technician, they are charging for testing. Or when you want to shift the meter because you are shifting your residence or office, you ask them to provide a technician where they charge labor charges, or you get duplicate bill from them. Now, when all these services are provided by them and they are charging for it, the question was whether it will get covered in entry 25. Now, for this, the CBIC wide circular has clarified that these are not covered in the exemption. Why? Exemption is limited only to electricity transmission and distribution, nothing beyond the transmission and distribution. So these are additional facilities. They are treating it as taxable. Next, in the same category, supply of service by providing metering equipment. Now here, interesting what you'll see that from 25 they have removed it. The CBIC circular says no, this is taxable. However, the government felt that we should provide exemption to some of these. So they have carved out a new entry saying that though it is not covered in 25, but I will cover some of these services in 25A and they will be exempt. What are these services? Providing the meter on rent. then the testing of meters, then releasing the electricity connection, then shifting of meters. So all the above services which the CBIC clarified is not getting covered in the above entry, which is correct. But the government wants to provide you the exemption for that. So they have carved out another entry, because of which now all these additional services are also exempt. Then comes the services which an incubator provides to incubatees. Now, what are these incubator and incubatees? See, student, this is a very innovative concept which is now being used across the world. See, you are a software engineer or a software developer. You are very talented. You have, let us say, mastery over this software development. Or let us say you have done some ethical hacking course and you are very uh, efficient in that. But now, if you want to do any of your business in this field, you require a huge setup, a very strong internet connection, a very high-end laptop, and servers and systems. Only then you can do this at a commercial scale. Now, many times it is not possible for you to invest these lakhs of rupees, because you'll have to make a proper setup and then only you can run these facilities. So it was difficult for you to start your own business. So came the concept of incubation, whereby a person who is having huge finance, so it may be any big business shot, or let us say any investor who may be otherwise a film celebrity or a cricketer who has huge money and he wants to get into this type of business. So what this particular person does, he's called as the incubator. This person will develop the entire facility. So let us say a whole building is taken on rent, and that person will develop each floor or each room in the floor as a specific dedicated uh, unit for doing all these IT related services. Now you go to this person saying that now you give me either a whole floor or 2 3 floors on rent, where you can now run your business. So you become the incubatee. So you are the entrepreneur who is located in the premises of the incubator. And the incubator is what? Either technology or science and technology, or relating to the software. Any of these places which is developed by an investor who is called as incubator, you have started your business in their premises, and they are charging you obviously some rent or management fee. That rent or management fee is exempt if you are a small incubatee. Now, who is a small incubatee? Incubatee whose turnover is not exceeding 50 lakhs. That is, your turnover is up to 50 lakhs in 3 years. So, sorry, not 3 years. Your turnover has not exceeded 50 lakhs in the last year. And if you satisfy that condition, then for next 3 years, you will be having exemption on the rent or the fees which is charged by the incubator. So incubator is creating this facility and providing it to you. So whatever is the fees or charge by the incubator to you for providing these facilities, that charge is what is covered in this entry 44, and it is exempt to you for first 3 years of your agreement. Then R&D services, where some consideration is charged. Now it is charged by you to whom? You are charging the consideration against the R&D services which is supplied by government entity or a research association, which if you remember in section 35 of the old Income Tax Act, they are approved. So where any these type of research facilities are provided by these persons and you are making payment to them, that is eligible for the exemption. Then services which are provided by TBI, STPEP, etc. These are all different incubators, that is exempt. Then the services provided by journalists. So what they are doing, they are collecting and providing news to various news channels or to various newspapers. So their services are exempt. Then if you go to a public library, the fees which is charged for using public library is exempt. Then wherever you are organizing any type of exhibition outside India, so you're organizing, let us say, a textile exhibition outside India, and you ask all the Indian textile industries to participate in that particular exhibition. So whatever is the stall rent you will be charging to these all exhibitors, that will be exempt. Next, tour operator service. When this tour is either partly or wholly in India, and it is provided by a tour operator who is providing it to a foreign tourist. So where a foreign tourist is coming on tour to India, and as a tour operator, you are providing the foreign tourist this tour operator service, where at least partly the tour is in India and partly it is outside. The value which is performed outside is what is exempt. Next, for fruits and vegetables, after purchasing from farmers, nowadays these extra functions or activities are performed so that the life of the fruit and vegetable can be increased so that they can be even exported. What are these? Preconditioning, pre-cooling, ripening, waxing, retail packing, labeling. So all these things are done. Now these are all non-agriculture services because they are performed by non-farmers. They are performed by some businesses or industries, but they are given exemption so that these fruits, vegetables can be sold to different parts of India, plus they can be exported. Similarly, services of these special organizations like NCCD is exempt. Second, services where you avail by filing RTI, there is a fees that is exempt. Then services by way of granting national permit. So wherever a truck wants to do GTA business, it has to take permit. So the permit fee is exempt. Services by foreign diplomatic missions who are located in India, their services are exempt. Then wherever any type of sporting event is organized by a recognized sports body whose definition we have already seen. These sports body, whenever they organize an event, they require services of individuals who will either be the player in their tournament or a referee, umpire, coach, or team manager. So whatever charges, remuneration fees they pay to the player, referee, etc., will be exempt. Plus, whatever charges they pay to the other sports body. So let us say in India, there is a New Zealand series happening. So when New Zealand team comes to India, Indian board pays to the New Zealand board. That is also exempt. And lastly, when you use any public washrooms, which is called as public convenience. So you use some public convenience facility which is on the roadside because you are traveling, you have to pay some nominal 5, 10, 20 rupees. Those charges are also exempt. Then some clarifications. GST paid, sorry, GST on payment of honorarium to guest anchors. Now, what are these guest anchors? Many times you'll find that in various TV shows, they invite anchors. They invite, you can say, so-called learned persons or any specific type of persons who act as anchors in those TV programs. Now, in such cases, whenever these anchors are getting remuneration for their participation, the question is whether they are liable for GST. So the answer is, it is clarified that supply of all goods and services are taxable unless they are specifically exempt. But these services which are provided by these guest anchors has no specific exemption and they are liable to GST. Why this point was raised? We saw one entry relating to independent journalist, and the journalists are giving news to the news channels, and that is what is exempt. So the question came was that when these guest anchors are invited, who also give a lot of information on news on the channel, whether the remuneration paid to them will be exempt? Answer is no, because many times they are coming over there for a discussion. It may not necessarily be providing of news. Now, besides all the above services that we have discussed, which were exempt under the CGST notification, now we have one specific IGST notification. IGST notification covers all the above services plus some services which are in the international domain. Now, those international services are also covered. Now, these services, what we are discussing is exclusively in the IGST notification. First, services which are received from a provider of service who is located outside India. Who is located in non-taxable territory means the person is in foreign territory, and these services are provided by such person to whom? To either government or to a registered trust, or it is by way of supply of online education, periodicals, journals, which will be used in schools, etc. All this will be exempt. However, the exemption shall not apply to OIDER services, that is online information database access or retrieval services, when it is received by persons who are specified above. So only in those above specific cases where the outsider is providing services to government or for schools, etc., only that type of services exempt. Next, second exemption is for import of service by an establishment of a foreign company in India, which is an airline company, from a related person or from any of its other establishment outside India when made for a consideration. So see, basically what is this? So you are an airline company. Now you may have an office in India, plus you also have an office outside India. Now between both these offices, there would be different type of services flowing. They have exempted those services. Next, service provided by a tour operator to a foreign tourist in relation of tour which is conducted wholly outside India. So in previous entry, we saw partly inside, partly outside. Here it is saying where it is conducted wholly outside, that is also exempt, because we want to give exemption where tour operator service is given to a foreign tourist, and that too for tours outside India. Next, services supplied by an establishment of a person in India to an establishment of the same person outside India, which are treated as distinct persons, provided the place of supply of services outside India. So in short, my office in India is providing any service to my office in Dubai. Nowadays, you know, many of our professionals have set up their offices in Dubai. So my office of India provides services to my office, which is in Dubai. And as per the place of supply provisions, the place of supply is Dubai. Then they are saying we will exempt this service. Next, import of service by United Nations or these specified international organizations for their official use. So we have all these international bodies, offices in India. When they are importing any service for their official use, that is exempt. Similarly, we have these foreign diplomatic missions or consular posts in India. When they are importing any service from outside India, that is also exempt. And services provided by an intermediary where location of both supplier and recipient is outside India is exempt. So I am an agent, but I am an agent who is connecting whom? The supplier of Dubai with the recipient of USA. So I am an agent sitting in India, but I am providing these services where both the parties, the supplier and the recipient, are outside India. Then my agency services will be exempt. So student, that is all from my side today. There are a few small exemption entries, not very significant one. I'll request you to go through them from the module. So that is what is the end of exemption chapter. Recently, there is one more entry added in the form of 11A, though this has not yet been used till now. But what is this 11A entry saying? Now this is interesting. Government realized that after GST was introduced, there were situations where some businesses or some transactions were exempt in the pre-GST era, and whether they are exempt or not in GST era was not clear. So there was no clarity about their exemption, but as a matter of trade practice or as a matter of general practice, because they were exempt earlier, they continued to apply exemption in GST. However, later on it is found that no, you did not have exemption in GST. That exemption was in service tax or in VAT. Now these people may suddenly come into a situation there where they may have to pay tax of last 4 or 5 years at one time. To avoid that, Section 11A has been brought in. What does Section 11 says? 11A says that whenever, as a matter of practice, which was generally prevalent, so in your industry, in your category, this practice is prevalent. What is the practice? The practice either of not levy of GST or levying GST at a lower rate. So either you all were not charging GST because you are under the assumption that it is exempt, or you are charging GST at lower rate, but now in GST the rate is higher. If any such thing is happening, then the government is having power to exempt you from paying this differential tax. So the government, on recommendation of council, using the power given under Section 11A, will pass a notification whereby either the whole or the part of this tax which you have not paid because of the general practice, they can say no problem, you pay now onwards, but for the past period we are exempting it. So this particular 11A has been brought in to give relief to those people who were earlier exempt before GST and they continued the same practice now. Later on, when it was proved that their services are taxable, but now they are facing a burden of past period. So 11A is empowering government to exempt them for the past period differences. Till now, till date, no notification has been passed using this particular power. Whenever in future it will be passed, you'll have a separate exemption notification for that also. But right now, there is no such notification. So with this, students, we complete our entire chapter. Kindly read them, kindly revise them regularly because there are many entries and many times it is difficult to retain all the entries. So with proper regular revision, you will be in a position to handle it. Yes, Radha.
Sir, you had explained the entry number 25 with regards to Maharashtra State Electricity Board. So, if it was not being exempt with specific that metering charges and testing, then why 25A was being specifically carved out?
No, but I understand this. In 25, those services were not getting covered in exemption because 25 only provides exemption to distribution and transmission service. So, first clarification was that you are not eligible for exemption under this entry, which is 25, because 25 is only limited to one service, that is transmission and distribution of electricity. But again, see, understand one thing, you are exempting my major service. I am getting 99% of my revenue. I am that electricity supply company. My 99 or even more than that is getting from these services, which is the main transmission or distribution service, and very nominal, because how much will be fee for transferring meter rent? 500, 1000. Out of my crores of turnover, hardly few lakhs is these fees. But it was not technically falling in 25, that was clarified. But they did not also want to tax it because for that small amount, these companies would have to take registration, file returns, do the compliance. So they passed another exemption entry, 25A, saying that this will be exempt.
Yes,
Like how
got
we
it.
have that hostel entry. So hostel is excluded from the above entry in 12 and then a separate entry is passed in 12A.
Yes, that's why, because it should not contradict with the main provision which was
So it
already
is
in
not
place.
contradicting. Na? That is why they are
Yes,
excluding it from the main first and then passing a separate entry. So it will not
correct.
contradict.
Okay, sir.
Yes, madam. Okay, students. I hope everything we discussed is clear. So let us conclude today's session and please be in touch with the topic because it is very vast. Keep on revising at periodical intervals so that you will be in touch with the subject. Thank you. Thank you very
Thank you,
much.
sir. Take care, sir.
Thank you. Good day. Yes, sir. Thank you, sir. Okay, Sanket ji. Good day to you also.